Hey everybody, it's Josh Alexander from Orange County Housing Market News. If you're a returning subscriber, thank you again for your continued support. I sincerely appreciate it. If this is the first time you're tuning into this show is all about Orange County real estate. So I go over local trends happening in the market, I interview other experts in the field, and then I'll go over some tricks and tips for both buyers and sellers. That way, if you're thinking about getting in the market, you'll know exactly what to expect and be one step ahead of everybody else. So if you are thinking about buying or selling a home anytime soon, this is a great place to start. Now on today's episode, I'm going to be going over the August housing market update. So we'll talk about what's been happening over the month of July and what that means for the upcoming month of August as well as the rest of summer. And then we'll also be going over the big news, which is that the foreclosure moratorium has just ended and what that means for the housing market, and should we be expecting nothing but doom and gloom from here on out. So let's go ahead and get into it. Okay, so really quick before we get started on the data, if you're finding this information useful, can you do me a favor and please hit that like and subscribe button below? And if you're watching this on YouTube, also hit that bell button. That way you're notified every time a new episode is released. And if you're listening to this through the podcast form, if you have a free 2 or 3 minutes out of your day to be able to go through and give me an honest review of how I'm doing, I'd really appreciate it because it also helps new listeners understand what this show is about and what to expect. Okay, so now that that's out of the way, let's go ahead and start looking at some of the data surrounding the housing market. So let's first start with what's happened over the last month of July, and that's going to set us up for what to expect as we head into August as well as the rest of summer. So if you remember at my July market update I did at the very beginning of July, I let you know that supply was starting to increase and demand was starting to decrease. However, that was completely typical. It was nothing to worry about. We weren't about to hit a giant housing crash. We weren't at the top of a housing bubble. It's something that happens every single summer because people get distracted. They go on vacations. They're going hang out with friends and family, going to the beach. It's something that happens every single year, and especially this year when people have been itching to get outside, they're taking more vacations than normal, so house hunting is not at the top of their priority right now. So that's typically why you see that demand go down, and when demand goes down, homes sit on the market longer, which means supply starts going up. So that's what we saw at the beginning of summer. And over the last 4 weeks of July, we saw that same trend continue. So over the 4 weeks of July, we saw demand go down by about 3% and supply go up by about 6%. However, there is a little bit of an asterisk by that because interest rates. So if you've been watching them since the beginning of the July, where they started right around 3%, they've actually dropped again, and right now we're hovering right around 2.8%. So when interest rates drop, you typically see demand start going up again because buyers want to take advantage of it. So over the last 2 weeks of July, we actually saw demand increase a little bit by about 2%, and we saw supply really flatline and not change much over those last 2 weeks of July. So the majority of the movement happened in the first 2 weeks of July when it comes to supply and demand. And because those lower interest rates that we've been seeing week after week have been happening over the last 4 weeks now, we're starting to see demand go up a little bit. However, I think that's going to be short-lived. So I can't see these interest rates staying below 3% for much longer. We're going to start seeing them raise someplace above 3%. Not going to get anywhere around the 4 to 5% by the end of the year, but I wouldn't be surprised if we got to 3.2, 3.3% by the end of the year, and that will continue to keep demand a little bit lower and supply will continue to go up as it traditionally does towards the end of summer going into fall. So where does that put us for the housing market right now? So just to give you some perspective, during the month of July, typically you usually see around 78 days, average days on market, which means the day the seller puts their sign in the ground to the day it goes into escrow. This year, we're currently hovering around 27 days. So anything under 60 days is considered a seller's market. At 27 days, we're still in an extremely hot seller's market right now, where homes are still getting multiple offers, and as long as sellers are pricing them correctly, you're getting your home into escrow very quickly. But I wanted to cover one of the biggest topics that's going into August that you're going to hear about over and over again from the news articles that you're reading, and that is that the foreclosure moratorium has ended and the housing market is in trouble. So let's look at not only the people that have exited forbearance recently and what they've done as they've exited, but also let's look at some of the data surrounding the people that are still in forbearance and how that might impact the housing market as they eventually exit forbearance and what that does to the housing market over the next couple months. So out of the people that have actually exited forbearance from June all the way through mid-July, only about 16% of them have exited forbearance without any kind of loss mitigation plan in place. That means that the other 86% of people that have exited forbearance have either paid back their payments in full, they've paid off their mortgage completely, they've already sold their house, or they've got to their bank and they figured out some type of loan alteration that's going to make them be able to stay in their home and continue with payments and not lose their house. So as you can see, only a small percentage of people that are exiting forbearance right now are really in trouble of going through the whole process of foreclosure, leading to them having to sell their house. Okay, so now let's go ahead and look at some of the data surrounding the people that are currently still in the forbearance period and what that's going to mean as they exit forbearance and what that means for foreclosures and the housing market moving forward. So right now, we currently have about 1.75 million people still in the forbearance program, and that's dramatically lower than it was at the height, which was over 7 million people, but it's still a decent amount of people. However, most economists are predicting that out of those 1.75 million people, we're only going to ultimately see maybe 10 to 20% of those people actually go through the foreclosure process and have to sell their home that way. So what that ultimately means is we're probably looking at anywhere from 175,000 to 350,000 people having to sell their home because they got foreclosed upon, they couldn't afford the payments anymore. Now, although that is obviously tragic and we don't want anybody to lose their home, when you look at that at historic averages, right now, if you look at the last 3 years, excluding 2020, obviously because of the pandemic, we're averaging right around 290,000 foreclosures every year in a typical year. So if you look at that compared to what most economists are estimating right now, it's really not going to be that much more than we see in a typical year. And there's a lot of reasons that economists believe that. So I want to go over some of those reasons so you can kind of see the insight on the data that these economists are looking at to make those predictions. So the number one reason is going to come down to home equity. So right now, according to CoreLogic, Americans have more equity in their homes than they ever did before. That over $200,000 is the average equity that a homeowner has in their home right now, which basically means they're sitting on a chunk of change, a pile of cash that's going to help them get through some rough times and be able to keep their homes. So if you look at the people that are still in the forbearance period, Black Knight, which is a very large mortgage data analysis company, just came out with some new numbers saying that only about 4% of the people that are currently in forbearance have less than 10% equity in their house. Now, you might be wondering, well, that's great, but what about these people that are in forbearance that haven't been making their payments? Are you also calculating that? Well, luckily, Black Knight went ahead and did those calculations as well. So they looked at all the people that have been missing payments, and when you take all that into consideration, right now, only about 13% of the people that are currently in the forbearance program have less than 10% equity in their house, even when you take into account the missed payments they haven't been making into the total equity of their house. So why do I keep talking about this 10%? Well, if a homeowner has at least 10% equity in their house, it means that if they need to sell their house for any reason, they're going to be able to sell it and walk away with either a profit or at worst walk away breaking even. So this means they can sell their house as they normally would on the market, place it on it at a normal market rate price, and because demand is so high right now, they're going to be able to sell their home quickly, get the money, and it's not going to lead to a foreclosure. So this equity that these people have built in their house is going to be a very big, important stepping stone to help them sell their house if they have to at market rate, which is not going to dramatically decrease home prices for any reason because they're going to be selling it at market value. The second reason economists are saying that we're not going to have a giant wave of foreclosures anytime soon is because the mortgage practices that have been put into place after the last housing crash have basically put very strict guidelines on who can get a mortgage. You have to be very well qualified to be able to afford a mortgage right now. It's not like it used to be where they had ninja loans, which basically meant that you didn't have to provide any income, you didn't have to provide any asset proof. They basically just gave you a loan as long as you're able to breathe. That is no longer the case today. You have to prove and show documentation that you have the ability to pay for the loan and that you have some assets in place as backup as well. So because of that, the people that are currently in a mortgage right now not only have a lot of equity built up in their home, but are typically more financially able to pay that mortgage on time because of these stricter lending practices that we've had for almost 15 years now. And the third reason that we're seeing these low predictions for the people that are actually going to have to go through the foreclosure process is because the government has learned their lesson on what happened during the last housing crash and how they did not provide enough financial assistance to have people stay in their home. So I talked about this in the July update. There was a bunch of stuff the government was doing to help people stay in their home, whether they are a renter or a homeowner. And it was just announced a few days ago they're going to be doing even more now. So now they're saying that if homeowners have not made their payments, they can go back to their bank and at no cost to them, as long as it's a federally backed mortgage, they can take whatever payments they missed, put it on the end of their mortgage, and yes, they're going to be paying their mortgage for another year and a half if they haven't made any payments over the last year and a half, but enables them to basically catch up on their payments. They're no longer behind, and as long as they can continue paying their mortgage from here on out, they're able to keep their home. So for the people that can't afford to continue paying the same dollar amount on their mortgage, let's say they had a higher paying job, the pandemic struck, they lost their job, they were able to find employment again, but maybe it wasn't quite as much as they were making before. The government is now talking to lenders and telling them that they need to be able to work with these homeowners and be able to reduce their payments up to 25% of what they were paying and restructure their loan to be able to keep these people in their homes and not have to go through the foreclosure process. So again, these are a lot of programs that continue to roll out to try to find every way possible to help homeowners stay in their homes. Now, is everyone that hasn't been able to pay their mortgage going to be able to qualify for these programs? No, but there's a good majority of people that will be able to qualify, and because of it will be able to keep their house and not have to sell it. And that's ultimately what the government is trying to do, is trying to find ways for homeowners to stay in their home and not lead to any kind of mass foreclosures like we had last time. Now, speaking of mass foreclosures, I just want to give you a few key data points that really goes to show you that this is nothing like the housing crash that we had in 2006. So again, we have about 1.75 million people currently in forbearance, not foreclosure, but the forbearance program. And yes, some of those will eventually lead to foreclosures, most likely not very many, but there will be some. Now let's just assume that every single one of those 1.75 million people ended up going through foreclosure. No one's predicting that, but let's just assume that for a second. If you look at those numbers compared to the amount of people that went through the foreclosure process back in 2006 through 8, that was 9.3 million people. Right now we have 1.75 million people in forbearance. And again, even on the high end, we're looking at under 500,000 people actually going through the foreclosure process. So you can see by that data point just alone that this is not even something you can really compare. So another national number that I do want to bring up is the amount of current active inventory we have on the market right now, that just kind of goes to show you how much of a lack of supply that's on the market nationwide. So typically, over the last 40 years, the National Association of Realtors has come out and said we usually have about 2.5 million homes on the market at any given time over the last 40-year average. Currently right now, we have 1.37 million homes. So you can see that there's over a million home gap that we have in the market right now. So even if we had a bunch of foreclosures hit the market more than the experts expect, we're still going to be able to absorb that and still basically be in a normal market. So for buyers for the month of August, you're going to have extremely low interest rates. You're going to have inventory continue to rise, which is just going to give you more options, less competition, and you're still able to take advantage of the low interest rates to get yourself a very low mortgage to be able to have over the next 30 years and have those predictable payments. Now, you do want to remember this is not a time to wait. There is still appreciation happening every single week in the market right now. It's still a seller's market, which means the longer you wait, the more homes are appreciating, the more likely it is that interest rates will be continuing to rise, and it's eventually going to price you out of the type of home you might be able to afford right now. So if you're thinking about buying a home this year, make sure you talk to your lender, get that pre-approval, talk to an agent, get an update on the market for what you're specifically looking at as well as the area you're looking at so you know what to expect, and get out there and start looking. Now on the selling side of things, during last month's update, I told sellers that if you're looking to buy a home after you sell your property, you probably want to get it on the market as soon as you can to take advantage of the hot demand on the selling side and the low interest rates on the buying side. But if you weren't trying to buy a property and you just needed to sell something, you could probably wait another month or two before you put it on the market to take advantage of the higher appreciation rates. Well, we're at that point now. So we're at the point at the end of summer where you're going to start seeing demand start to decrease more significantly at the end of August as we go on through the rest of the year. So if you want to be able to have that competition for your home, the chance of getting multiple offers and getting the highest prices possible, you're going to need to get your home on the market as soon as you can. So this is letting you know that the longer you wait at this point, the lower demand's going to get, because the interest rates at this point are really not going to go any lower. So you're looking at a point now where the longer you wait, the less demand there'll be and the more competition you'll have because there'll be more homes on the market. So if you're thinking of selling your home, now is the time to get it ready, get it on the market, get it properly marketed so that way you're able to get the most eyeballs on the home and get the highest offers and hopefully get that bidding war started so you're able to get the best price possible for your house. Okay, so that's it for the August update. However, if you do want some more information about the stuff I talked about today in even more detail, please see the blog post that I posted below in the notes. That will give you some more information as well as some graphs to kind of give you an expanded view of what I'm talking about. And again, if you're finding this information useful, please hit that like and subscribe button. And if you have a family or a friend that might find this information useful, that are thinking about buying or selling a home soon, please consider sharing it with them. I want to make sure that everybody is informed as possible so that way when they do enter the market, they know what to expect and they can hit the ground running. So until next time, stay healthy, stay happy, and I'll see you in the next show. Bye.